everyone. It's Trainer Mike with the TXA Market Roundup, and you are here with me on Sunday. It is the day before the U.S. celebrates Memorial Day, so it is a holiday weekend in the U.S. Markets are closed tomorrow. It is a government holiday, but most of the rest of the world is still doing what they normally do, and crypto certainly will continue to trade. Now, if you're a community member, a subscriber, and you saw the post from today, that was actually recorded by me on Friday, and I'm glad T.I. got to take the day off. Again, my apologies. I messed up one step in the process of getting it onto Kajabi, but that's all rectified now. So if you want to check that out and you're a subscriber, it is on Kajabi. But it's very interesting that the way things worked out couldn't be more exciting for me as somebody who's watching the charts, especially Bitcoin, because here we have something that looks almost like it has changed, right? So we had this pole that we dropped into, this rectangle, this box pattern. We dropped into it, and the expectation is you continue onward. That's what I was looking at on Friday in this candle. And instead, what happened, it looks like what happened is yesterday, we had a daily candle pop off, and we broke that pattern that we were in to the tune of about 5%. But that's not what actually happened. Actually, at the end of the day, in the last 8 hours, if you will, we popped almost 4%. So really, we lost some, we gained back, and we ended up about break even. And only in the last third of the day did we start pumping on Bitcoin. And we pumped a good 5%, and now it is a new daily candle. It looks like it's Monday already, even though it's not where I live. That's how this chart is measured. And we are just sitting at the top of this bit of a pump from yesterday, quote unquote, really only about the last 8 hours. And it's very interesting because in the big picture, nothing has changed on Bitcoin, but this move liquidated quite a bit of shorts. If you go out and look at the data, a lot of shorts were liquidated on that move. And they're basically out of the run now, right? So the market makers on leveraged exchanges love to do these types of moves all over the chart. You see them all the time. We move one direction, and then we end up going further in the opposite direction. And what that does is it liquidates anybody who went short, gets liquidated before the push actually lower occurs. So anybody who went short on this sideways move over the last couple of weeks and did so with more than 20 times leverage from the middle, it could be lower from the bottom or more from the top, but any kind of over leveraged position just got wiped out at the end of the day as of this candle. And now we are sitting, watching, and waiting. But for me, nothing changed in the grand scheme of things. I still think we're coming back to check in around 23, 24. It doesn't have to happen, but in my experience, that makes the most sense, because what's going to happen now is a lot of people are going to go long. A lot of people are going to flip the other direction, buy Bitcoin, go long. And if enough leverage traders get on the table, the exchanges won't be able to resist. And it is likely we end up then lower because the stops will be just beneath where these wicks were. Most of the stops for the people going long should be somewhere just under 25K or so, which means, full circle, the most probable target for the people that stand to make the most money, which is exchanges and liquidating market makers on the opposite sides, would be about 23 to 24K. Even better if they go lower, because anybody who went long up here could get liquidated. So that is the risk on the table. Interesting to see Ethereum here made a nice little move as well, and is sitting at the 236 retracement, knocked right into it, and is kind of just setting there. But here's where the interesting action occurred. Bitcoin. And you can see on here on the daily candle from yesterday, a big old wick. But if you look on the low time frame, you can see what does this mean? This means Bitcoin started to go up, got about 1.5 to maybe almost 2% ahead of ETH, and then ETH caught up later. And this is about 1, 2, 3. So 3 to 4 hours ago, ETH caught back up to Bitcoin. And we can actually see that if we look at Bitcoin and ETH side by side. Here's your hourly chart for Bitcoin. Let's take a look at ETH. And we're going to compare in a new pane below. And we will have to adjust this to candles. But this will give us a bit of an idea. So Bitcoin up top, you can see this was a bump on both, mostly sideways. And here, right here, you can see ETH stays sideways while Bitcoin makes a nice little move. You get almost 2% out of that. Then ETH starts to catch up, And Bitcoin makes about a 3.33% move, while ETH makes about 3.33%. So ETH catches up here at the end. But the interesting part is you can really see that time differential and how there's a bit of slippage there. If you go down to the lower time frame, for a while, Bitcoin pumped about 1% above ETH, and ETH was just hanging around waiting to catch up. But eventually the market makers, for whatever reason, at this moment, as this was starting to slip, they came back and ETH was able to catch up. So very interesting when we get those differences. Most of the time, the high frequency trading bots keep these moving together. And that's why most of the time, you don't get a lot of variance. It's only in these big moves when you see about 3-4% creep out that you realize that there is a bit of a push. When you get a push on something like Bitcoin, it takes a little bit for the response to trickle into the market. You can see that play out on the charts. Now, interesting to also see where the DXY is and has frozen for the weekend, because the DXY index is not running over the weekend. So you had Friday there, and now you can see Monday here creeping in just a little bit of red. Now, what does this mean? If the DXY continues to push red, then we should see Bitcoin continue to go green. But some of this may be getting driven by the talks that the US debt ceiling has been negotiated, that they're going to raise it, that it'll be set for another 2 years. That should, in theory, lead to some kind of a cool off of the fears going on surrounding the dollar. But it also could cause the dollar to spike. If the deal goes through, it's possible that the dollar becomes more volatile in response. It may be already priced in, though, and we won't know until later in this week, because again, the markets in the US are going to be closed for most of Monday. So all of Monday, excuse me, but they won't be open until Tuesday. So we won't know what's going on with equities. We'll have to track with crypto. It may mean a little more volatility in crypto because there's less counter resistance from other markets and there's less to trade. And when people are at home and not at work, when they would be trading, you may see some more action happen on crypto. So keep an eye open on the S&P and the Dow on Tuesday when things start to liven up a bit. And you can see they're already got that candle open and waiting at the top here for Tuesday. So it'll be interesting. Will we get a pop in the equities to match what Bitcoin's doing, or will this short squeeze kind of fizzle out? And what I most likely expect is for Bitcoin to come back down into this area or start slipping down below in the week or weeks ahead. So that's all I've got for you guys today. Thanks for watching. And again, my apologies on that recording. I know exactly what to do now, so it won't happen again. But definitely want to make sure that whenever TI needs a little bit of a vacation, because he almost never gets a vacation. It's crazy. He's doing this 3 days a week, every week, nonstop. So make sure that I will be ready for that. And I appreciate all of you and your patience as I figured that out. So thanks, everyone. If you have any questions or concerns, please drop them into Discord. If you're not in Discord yet, please be sure to drop into Discord and join us there so you can join in the conversation and see what we're all about. Thanks, everyone.